Okay, welcome back. Piramal Enterprises is on our radar. The company reported third quarter numbers, consolidated net loss of 2,378 crores. But there is an exceptional item here, which is basically with regards to provisions made for investments in alternate investment funds. We'll talk about that and more with the management. And we have Jairam Sridharan, Managing Director of Piramal Finance, joining in to answer those questions. So great to have you with us here. Appreciate your time. Let's just start with provisions. Could you break them break them down for us in the third quarter? How much of this is for AIF related provisions and others?
Yeah, so we made about 3,500 crores worth of provisions related to AIF, and we wrote all our AIF investments down to zero. So we had a total exposure of about 3,500 crores in AIFs, of which about 1,700 crores had linkages with accounts where we have exposure. However, we have gone ahead and taken full provisions on the entire 3,500. Apart from that, the credit costs for the quarter were about 250 crores. So much smaller number compared to the AIF exposure write-downs that we have taken.
Mr. Sridharan, by when do you expect the AIF-related provisions to come back?
Yeah, so the AIFs, which are these underlying investments, are doing well. The underlying clients are doing well. There are 13 underlying exposures. They're all completed projects and cash flows are coming in. We have mentioned in our material that over the last couple of years, Piramal has received about 1,100 crores of cash flow from these clients that are underlying these AIFs. Just in the last 3 quarters, we have received about 700 crores of cash flow here. So clearly, cash flows are coming from these clients, and that underlying economic asset doesn't change. The economic value of that doesn't change, even as we have made this accounting treatment of creating provisions and writing these things down, which means that in the coming quarters as well, one should expect to see these cash flows coming in. And as they come in, we will be able to write back some of the capital that we have written down during the course of this quarter. We have written down about 400 basis points of capital with this 3,500 crores. That 400 basis points should in large part all come back over the course of the next 6 to 8 quarters.
6 to 8 months. So basically, FY25 going into 26, most of this should be back, right?
Bulk of it should be written back. There will actually be a little bit of a front-end bias. There will be a little bit more will happen in the first 5 quarters, and only a tail will remain beyond that.
Well, sir, credit cost was around 240 crores odd. Why has this gone up on a quarter-to-quarter basis?
The quarter before, we had about 198 crores. So we had a 50 crore extra credit cost during the course of this quarter. The gross credit flow was about the same as last quarter, except that in the previous quarter, we had 140 crores more of recoveries from old NPAs, which we did not have that much in this quarter. That's what causes that 50 crore swing, even though the gross new NPA formation was fairly limited.
So, okay, just to complete that point on the provisioning, etc., the sharp increase in capital consumption then is mostly all AIF related, or is there something else?
Yeah, so all the capital consumption is due to the AIF write-downs. So we consumed about 400 basis points in that. We also consumed 80 basis points of capital because of the other RBI circular around unsecured exposures and higher risk weights on unsecured exposures. That cost us, a little under 80 basis points of capital. So between these two, we ended up using almost 500 basis points of capital during the course of the quarter.
All right, sir, your growth in unsecured segment, though, is high, and the RBI is cautioning on this segment. Could you explain?
Absolutely, and there's good reason to be cautious. You and I have spoken about this in the past. There's a lot of risk increase that has happened in this segment. We showed some new disclosures in our presentation this quarter, where we showed how, in particular, the small ticket unsecured consumer lending exposure, less than 50,000 rupee ticket size, had grown quite dramatically in risk, and 2 to 3 quarters ago, it had gone to become 3 to 4x of the risk of larger ticket unsecured. We have been tightening all the credit norms in that segment and reducing new exposures there. Because of all of that, that delta, which was 3.3x, about 3 quarters ago, has now reduced to about 1.5x. So the risk in the small ticket unsecured has come down in our portfolio quite materially over the last couple of quarters. Having said that, it is still higher than the larger ticket unsecured, and it continues to be an area that we need to watch closely. Overall, we disclosed 1.5% 90-plus delinquency rate in all our unsecured lending book. Because our unsecured lending happens at roughly 18% of interest rate, this 1.5% of delinquency is still very much priced into the product. Having said that, if this 1.5% tomorrow becomes 3%, it will be a totally different ballgame. So we have to keep watching it.
Well, sir, if I request you to give us some more clarity then. What is this as a percent of your book and where do you see this going?
Yeah, so the small ticket unsecured, which is the less than 50,000 rupee exposure, is only 600 crores. And since our book is overall about 70,000 crores, it's a very small percentage. It's less than 1% of our overall book. However, if you take all of the consumer side, all of the unsecured consumer side, that's about 6,000 crores, which is a little under 10% of our overall lending.
Okay. Now, housing disbursements, they were a little flat if I look at it quarter on quarter. So what happened?
No, I think we've had overall AUM level. If you see, we've had AUM growth of about 25% in housing. That's about kind of as good as we can expect in today's market. As you know, we operate in the lower end of the housing market, the less than 25 lakh segment, and that segment, the growth has been relatively muted. In the industry as a whole, the growth has been very low single digits. So in that market, we've been able to show an AUM growth of 25%. So we're quite happy with that AUM growth. Disbursement growth, kind of Q2 versus Q3 tends to be flat. You will see a higher Q4. It's seasonal, not much to say there. Let us also watch if there is anything that happens on the Pradhan Mantri Awas Yojana or something related to that in the coming months, in which case that will give a big fillip as well.
All right, a pleasure speaking to you, sir. Thanks so much for joining and giving us all of those details. But we need to put our eyes back on the market. Well, the Nifty is up close to 200 points. It's hit a double century. And you have the Nifty Bank as well, is still holding its own with a gain of around 1.4%. Good time to get in. Nimesh, tell us, what are you picking up in terms of DC chatter? The bulls are going into this event. They are